Hi, everybody. My name is Emily Price, and I am with the Price Group here at Keller Williams. And tonight, for everybody who's joining us live this evening, welcome. And I know some folks are going to catch our recording of this live webinar later. We want to make sure that everybody has access to all the information that they need. So welcome to the Price Group's webinar this evening, where we're going to discuss buying property in 2022. For many of you that are joining us this evening, know that we are happy to service multiple markets. The Price Group, we service markets in Florida, in Kentucky, and in Indiana. And so we would be honored to be able to help you with any of your real estate goals that you have in this coming year. So however, for tonight's conversation, we're going to focus on all of the questions that we know folks have around buying property here in 2022. So let's go ahead and get started. I'm going to give you a heads up on the topics we're going to cover. So the things that we want to make sure that we address this evening to equip you with the relevant and accurate information that you need is we're going to first just kind of like rip the Band-Aid off with the big question that everybody wants to know, everybody asks about: what is going on in this market? There's no denying that it's a little lively, a little zesty, a little unique. It's definitely has a pep in its step. And we get a lot of questions from our clients in terms of, is it going to crash? That big, bold word, crash. So we're going to talk about that tonight. All right. And then also, what's the deal with the inventory, right? Sometimes people's perspectives is like, where are the houses that I get to choose from? So we're going to talk about what's really going on there, because what we believe here at the Price Group is knowledge is power. And so the more knowledge you have, the more power you have, and the more equipped you are to be able to make decisions that you feel confident about and that you feel good about. And that's everything that we want to be able to do for our clients, making sure everybody feels confident in the process of hitting their real estate goals that they set out to hit. We also are going to talk about, what about future property value growth? How do I protect my investment in a market where again, it's zesty, there is a pep in the step of the market? How do I secure my house for today and protect my investment for the future? And also, while real estate does a great job of putting roofs over our heads, which is something that everyone needs, it's also a great way to build wealth here in our country. And so how do you do both? We're going to talk about that. And then that conversation is going to draw us definitely to, let's talk about those interest rates, right? They're definitely ticking up a little bit from what we've been used to seeing over the past couple of years. So we're going to talk about what that means in the grand scheme of interest rates. Where are we really, and how can we take that knowledge of what's happening there and apply it in a way that still makes us a very savvy, knowledgeable buyer. From there, we're going to talk about how we're going to get how if you are thinking about buying a property, whether it's your first home, your next home, your first investment property, your next investment property, we're going to talk about how to get ready. This is a market that requires you to get ready before you actually go shopping, so to speak, or before you buy. Those activities cannot be done kind of simultaneously. They really have to be done in a certain timeline. So we're going to talk about that. We're going to also talk about the difference between on-market and off-market properties, which is one of my favorite topics to talk about, and really is going to really equips our Price Group buyer clients with a lot of great options and opportunities. As we wrap up our conversation tonight, we're going to talk about strategy, how you are a successful winning buyer in this market, and how, especially the Price Group strategies, we work very hard to make certain that we have the most cutting edge, effective strategies that set our buyers up to win the right house for them in today's market. So we're going to talk a little bit about that. And then, of course, kind of wrapping up with getting prepped for the process of finding the right home for you. And then what are your next steps? All right. So we've got a lot of ground to cover tonight. Again, my name is Emily Price. I'm with the Price Group at Keller Williams Realty. I represent our entire organization that spans across several different markets in several different states. And we are all really, really honored to have you join us this evening. And our goal is to be able to equip you with the best, most accurate, trusted, credible information. And then, of course, we would also love the opportunity to earn your business to help you navigate through your real estate goals, celebrate with you at the closing table when you get there. So let's go ahead and dive right in. All right, we're going to start with the top. What is going on in this market? And that question everybody asks me, is it going to crash? All right, so I'm going to put my disclaimer, my caveat here, and that is that I don't have a crystal ball. So I do not know what is going to happen in the future, and I am not an economist, so to speak. I have worked full time and diligently in the real estate industry for the past 17 years. And I work in a company here at Keller Williams where we are constantly tracking and monitoring all of the information and the data and the numbers and the trends, everything that is happening around us, and really working to interpret it in a way where we can take that information and have it be helpful for our clients and helping them navigate through their goals. So no, I can't tell you exactly what's going to happen in the future, but I'm sure happy to share with you the information that I do have this evening, and hopefully be able to share it with you in a way that helps it to all kind of make sense, right? So let's kind of dive into this conversation here. All right, so what's going on? One of the most basic rules, if you will, of real estate is the economic primary principle of supply and demand, right? Supply is how much of a product you have, and demand is how many buyers want to buy that product, right? Supply and demand is true for any industry, whether it's housing or not. So obviously for tonight's conversation, we're going to talk about it in regards to the housing market. So another way that we talk about supply in the housing market is the word inventory. And all of the data that I'm going to share here with you tonight is derived from, or we have obtained the data through our thorough research within Keller Williams Realty, and using a lot of the research that and the data that we also get through the National Association of Realtors. So just so you know how I'm sourcing the information that I'm sharing with you this evening. So inventory talks about how many homes are sometimes you're talking about how many homes are on the market. Sometimes you're talking about how many homes are selling. All right. So what we're going to look at here in this display of data is we are looking at how many months of inventory we have on average in a given year. So let's talk about that again. This is not talking about how many total homes are for sale over the course of the year or how many homes do sell over the course of the year. No, we're just looking at it in terms of, well, when we break it down per year, and if we look at the whole year, on average in the 12 months out of that particular year, how much inventory, how many homes were available for a buyer to purchase on average per month. Okay. So when we're looking at it like that, and then let me back up to say what we're really doing is we're looking at the pacing of how that inventory moves in that market. How many months worth of inventory do we have available? Okay. So a general rule of thumb in real estate is this. You see that dotted yellow line going across the graph? That stands for what would in theory be called a balanced market. A balanced market where in theory it's completely balanced, not necessarily a seller's market, not necessarily a buyer's market. It's completely balanced. And in real estate, that balanced market lasts for a half a second because our market is always shifting, right? But if it was to hit that perfect balance point, it would be when we have 6 months worth of inventory on the market at any given time. That is what is considered a balanced market. So that means that there are enough houses or properties on the market that at the pace that the market is moving, it would take 6 months to sell them all. All right. That's what that means when you talk about inventory in terms of months of supply. So so again, if 6 months is kind of that balance point, we know that anything below that 6 month mark trends to a seller's market, specifically when it gets to be within that 0 to 3 month range of inventory. We are very much in a seller's market when we have 0 to 3 months worth of inventory on market. That means if at any given time, the amount of inventory that's available for purchase, it would take just 0 to 3 months to sell it all per the pacing of how the market is moving. Now, on the flip side, when you get north of 6 months, so 6 to 9 months, 6 to 12 months, when you get above 6 months worth of inventory of monthly supply, that then means that you are moving into a buyer's market, right? That means there are, again, basic rule of supply and demand. There are lots and lots and lots of houses on the market for buyers to kind of have have their choosing over. So this data looks at from 1999. So what is that? Roughly about 20-ish or so years ago to just the end of last year. So this data wraps up at the end of 2021. And you can see that last year was our most robust seller's market in terms of inventory on market, the supply each month. It was the most robust seller's market that our country has experienced since at least 1999, per the data given here. So again, what this is saying is the amount of property that was available for a buyer to choose month to month was tighter than it has been since as far back as 1999. All right. Now, as we move to the next slide that we have prepared for you, what I want you, this is where like you got to kind of not kind of get stuck in thinking about it too long in one way, because our previous slide talked about the fact that the choices per month were tight. They felt a little limited when you just looked at it from a day to day. However, that was not looking at complete home sales across the entire 12-month span of the year. So actually last year in 2021, so if you look at this graph, 2021 is the last teal bar on the right-hand side. The blue is the projected for this year of 2022. That's a projection. Obviously, we're just in the top of the second quarter. So we're not sure yet, but we do know how 2021 ended up. So this looks at how many homes sold in our country over the entire year period, over a 12-month period. And so while last year in 2021, the amount of inventory available month to month was tighter than it has been since 1999. When we look at the total amount of home sales, how many total homes were there available to purchase throughout the entire year? We see that actually we had nearly a record number of home sales in our country last year. Record as in when we look back all the way to 1990, which is a 31-year span of history. So again, in 2021, you see that 6.1 million homes sold. And our record year in our country since 1990, according to the National Association of Realtors, was in 2005 with just a little more of 6.2. So and then let's talk about what it's projected to do in 2022. If you're thinking to buy and you're like, oh gosh, it just doesn't seem like there's a lot to choose from, that's actually a false perception, because we project 2022 is going to close at 5.9 million sales, which means 5.9 million different options, product on the shelf, so to speak, for a buyer to choose from. And 5.9, I believe, still keeps us in the top four years in terms of total home sales in the past 32 years. So the takeaway here, without getting too lost in the data, is that there are plenty of options of product to buy. Product in this conversation being a house. So sometimes when we're talking to our clients right now, some general kind of on the street feedback, if you will, is, gosh, it just doesn't seem like there are any houses for sale, or it just doesn't seem like there's a lot to choose from. And so we don't want to be confused with the total opportunity. What we're really feeling day to day is that day to day, Day to day, it might feel like there are less homes to choose from on the market day to day than maybe in past years. But it's not because homes aren't selling over the course of a whole month, 12-month period. It's because the product is flying off the shelves. So the shelf life of the product right now, which is the house or the property, is very, very, very fast. And that's because of the demand. It comes up on the market and a buyer buys it. Comes up on the market and a buyer buys it. However, the good news is that houses keep coming up on the market. They just don't sit on the shelf for very long. And we know this again by seeing how we had nearly a record number of home sales last year in 2021, and we're expected to be rather neck and neck to it this year in 2022. So as a buyer, this data lets us know that there are plenty of opportunities out there. It's just that the market is moving really fast. Okay. So we're going to talk later on tonight about how you as a buyer and how we here at Price Group can help you be positioned with the pace. So one of the biggest differences with this market right now is it, again, has a pep in its step. It's super zesty. And to have the opportunity in this market, you have to move at a faster pace as a buyer than perhaps you moved maybe the last time you bought property. So that's one of the biggest takeaways that we want our clients to know and understand. Because again, knowledge is power. And when you have the information, then you're a whole lot more confident in the decisions that you're making. All right. So let's continue with our conversation. So a lot of people, again, my name is Emily. For those of you that are just joining in, I'm with the Price Group at Keller Williams Realty, and I have been working full-time in the real estate industry for about 17 years now. So with that level of experience, I have had the pleasure and benefit of working through multiple different markets, including the 06, 07, 08 market that many of us still remember. So a lot of people are, last time that we had this level of homes selling, again, from the previous graph, it was back in 05. And sometimes for some of us, that triggers a memory of what happened in the housing market soon after 06, 07, 08, 09. The market definitely crashed. Now, again, while I am not an economist and I don't claim to be, and I do not hold a crystal ball, so I cannot predict my future, nor can I predict yours. We are able to look at data, and we are able to look at trends that have happened in the past and evaluate, are those same trends happening again? Or are they not happening again, right? Are we following the same pattern or are we not? So here's what we know that, in my opinion, is super positive for the housing market and for everyone who invests in the housing market. Back in 05, there were the lending guidelines, the tightness around evaluating credit and home buyers credit were very, very loose. The regulations and the guidelines and the rules by which banks and mortgage companies loan money now are much different, much more regulated than they were back then. So kind of in layman's terms, one of the big things that was happening in 05 and 06 that caused our market to crash so badly is that a lot of buyers were obtaining mortgages, home loans that they weren't necessarily equipped to be able to carry, to be able to manage. So for the kind of the way we might speak to it now is per today's standards of qualifying for a mortgage when you go to get your pre-approval, a lot of people back then wouldn't have qualified for the type of mortgage that they still ended up getting. So what we had, and there were lots of other things there were lots of things going on in the market. That was one of the bigger things. And so how we saw that roll out is that we saw a lot of what we call distressed sales that came after that. And a distressed sale is when a seller has to sell due to a hardship, which can be they can't pay their mortgage payment anymore. Something happened that that is keeping them from being able to stay current with their mortgage, and it becomes a distress sale, which usually in the real estate world evolves itself into what we call a short sale or foreclosure or an REO. You've probably heard of those. Without getting into the weeds of all of that, basically the takeaway here is that when you look back to say '08, so as we were really understanding that we were in a highly shifted housing market in our country at that time, you see that the foreclosures, which are represented here in orange, were considerably up there at 27%. In fact, they stayed north of 20% for 3 years, '08 through 2010. And then short sales, which again is a conversation for another time, but short sales is kind of like a step of a distress sale prior to a foreclosure. A short sale, the homeowner still owns the property, and in a foreclosure, the homeowner does not own the property anymore, the bank does. And the short sales were also substantially very high, 13%, 10%, 12%. We were in the double digits of short sales for 5 straight years. That's a long time to have that many distressed sellers across our nation's housing market. So when we look at the landscape of the distress sales in '08 all the way through, let's call it 2012, the 5-year history, we see that where we are today in December, this graph ends in December 2021, nowhere near the same type of world are we looking at in terms of distress sales. We have less than 1% total of all of the sales in both and it looks like in both 18, 19, 20, 21, less than 1% of all the nation's home sales qualified as a distress sale. Whereas again, back in '08, over 40% of the home sales qualified, if I'm doing my math right there, which I think that I am, were technically a distress sale. So we just don't have the same type of things happening with homeowners today that we did back when we went through a true housing market crash, a decade or so ago. So that is good news. All right, let's move on. Another way that we know that, kind of staying on the same point just for a second, but that we know that the landscape, that the environment of the market in terms of home ownership and if you will, kind of a layman's term here of saying it like this, but the health of how people are carrying mortgages right now, how we know it is not trending the same way that it did when the market crashed last time is by looking at what we call underwater homes. Underwater homes is when a home when the mortgage, let's put it that way, when the mortgage has a higher balance on it. So for the seller to pay off the mortgage, it has a higher balance on it than what the market will currently yield for the property. So it's like, I owe $200,000 on my house, but my recent appraisal or my CMA or what have you, however you had your property evaluated, came in at 160. So my property is worth, in that scenario, $40,000 less than what I owe on it. And that would make that homeowner, that would make that homeowner be underwater. So we look at this graph here, shows us that historically in our country, that we have a historical average of about 6% of all mortgaged homes in our country are underwater at any given time. Okay. Now, what this shows us is that, again, back in 2010, 2011, 2012, we were far above the 6% average. Nearly a quarter of the people in our country who had a mortgage were underwater. 25% of all Americans with a mortgage were underwater back in 2010. Whereas right now, as we wrapped up, this data takes us back to Q3 of last year, only 2.1% of all mortgages in our country were underwater. So that's far beyond, almost 4 points lower than even the historical average. So this is also another good indicator that we are likely not to experience a housing crash as we did back in 08, 09, 2010, so forth. So good news in the numbers here. All right, let's continue our conversation. So we're going to shift a little bit now that we've ripped that Band-Aid and kind of evaluated like, oh, the last crash and what's happening right now and all of that. All right, so now let's talk a little bit more about what's the deal with the inventory. What is happening? Why is there limited inventory on the shelf? We already know partly it's because it's moving really fast. But what's the other part of that story? So let's check it out. So it has to do with the fact that our population in our country keeps growing, and our average lifespan, age of life, keeps increasing. And so, to put it really simply, we continue to have more and more people in our country that need a roof over their heads, right? So, our country's need for rooftops, for housing, is always is tends to always be on the incline. And so what we know that happened, one of the outcomes of when the market did crash in the early 2000s, is that one of the industries, and this is a whole nother conversation, so we'll just keep it real high level and succinct for the purpose of tonight. One of the specific industries that was hardest hit for a multitude of reasons were the builders, the construction companies. And so the impact of that is that our new home starts in our country got really, really low in comparison to the average of where we need them to be. So you can see how that yellow dotted line is showing us where the average new home starts need to be in our country to keep the housing inventory replenishing and matching the population and the needs of what we have. And you can see that in 08 was the first year that it dipped, the first year in accordance to this data, that it dipped significantly below that average. And we stayed under that national long-term average that we need. We stayed there underneath it from 08 all the way to 2020. So we operated with 12 years of having not enough new home starts in our country. In fact, last year, 2021, was the first year since 07 that we hit that long-term average that we need to hit, and even crested a little bit higher than that. So basically what we are feeling now is we are literally feeling, oh, well, all these houses that we were supposed to have built between 08 and 2020 that didn't get built. Yeah, that's what we're feeling. That's what we're feeling right now. And so a 12-year span of less than the amount of housing, the amount of rooftops, so to speak, that we need being started in new home construction, that is a significant impact that it's making on the pacing of inventory right now. So again, we go back to supply and demand. If we have more buyers that are interested in property than we have property for sale, that is when that supply and demand curve shifts to make the market be a little more challenging for a buyer, and what we would identify it as more of a seller's market when we're assessing the relationship between supply and demand. And again, that is going to go back to our overall decrease of the net total, the sum total of the decrease of new construction starts that we were basically counting on since 08, and now really feeling the fact that we don't have them. So, kind of looking at this data and kind of thinking about how that's going to impact us going forward, it's going to take quite a bit of time to catch up, to kind of fill that gap you see there, that kind of navy gap between the blue bars and the yellow line. It's going to take some time for inventory across our country to catch up. So our inventory situation right now is probably not super short term. But again, I don't have a crystal ball, just looking at the data that we have and then kind of interpreting it for making decisions going forward. It's very obvious that we've got some gains to make in new home starts. And so also as a buyer, that is why more than ever, one of our favorite phrases here, because it speaks truth here at KW, is buy dirt. As the old saying goes, they're not making any more of that, right? That is a truly a limited resource. So buying houses is great, and buying dirt when we need new home starts is also a fantastic investment. Here at Price Group, we can help you not only purchase the home you're looking for, we also do a lot of work with our clients when it comes to purchasing land, regardless of all the different zonings and your needs of zonings of what you're wanting to do with that land. So know that that is a way that we can help you as well. All righty, let's continue. All right, so let's kind of go to our next topic, which is, well, what about future property value growth? Protecting my investment. I don't want to spend, I don't want to spend all this money today and then, next year, be upside down or not be able to get my money back out of the house should I have to move. Again, don't have a crystal ball, but we can look at facts and trends that happen in our housing market to kind of assess this question. So let's dig into it. All right. So one of the things that you may or may not know, but is that real estate overall, from most economists and financial advisors, is considered a really great, safe investment. Now, that whole statement could be dissected and analyzed with hours and hours of conversation in all different ways in a different time. But for the sake of our conversation tonight, real estate over time tends to be a very strong and smart investment for how to spend your dollars, and a great way in which to build wealth for a multitude of reasons. But for tonight's conversation, we're going to look at one part of it. We're going to look at home prices and the annual appreciation of property again in our country. All right. So this graph takes us for the past 32 years worth of annual appreciation of homes in the United States of America. So you can see, again, this is charting 32 years. In the past 32 years, with all the different things that have happened, nationally, internationally, politically, everything across, all the different things that have happened, there have only been 5 years between 2007 and, if I'm reading this correctly, 2012, there have only been 5 years when the annual appreciation has been in the negative, when we have truly gone backwards. Only 5 years in the span of a 32-year history. Okay. And again, that aligns up with everything that we looked at earlier. There are more factors as well, but that is in alignment with the period in which we really struggled with underwater mortgages and things like that. So what this shows us is that 4%, give or take, is the number as somebody who buys, whether you're an investor of real estate or buying your own single family residence to live in, you're still an investor because that's a great investment. 4% is kind of the number that you want to keep in mind for the long term. On average, home prices appreciate annually about 4% on average a year in our country. Now, you can see that other than those 5 years that did slip into the negative, other than that, the lowest that we've seen is 2.7% in the past 32 years, and that was in 1992. So a 2.7% appreciation on your investment, especially if you're also having the benefit of living in the property and providing for your basic human needs of shelter. That's a good check in the box too. Plus, plus that the dollars that you're spending on housing to fulfill that need of yours that you have are also appreciating by 2.7% while you're just living in the property. Or better yet, if it's an investment property, somebody else is living in the property and also paying down your mortgage debt. Also a conversation for another time, but it gets even more fun to talk about it like that. 2.7% is a great appreciation, a great, a fantastic, great way to grow wealth. And even at 2.7%, that's below the average of 4%. So when we look at 4% kind of being our steady truth, on average over the past 32 years that this looks at, what we do want to call attention to is the annual appreciation that we have seen in our past 3 recent years. Apologies, I misspoke, in the past 2 years. So in this data shows us here, again, this is compiled from a variety of credible sources and put together for us through our data team at Keller Williams. It shows us that in 2020, on average, home prices appreciated in our country 9% in 1 year. And then in 2021, last year, appreciated 17%. So it's kind of a bummer if you wanted to buy in 2020 and you were like, no, I'll wait. That's a bummer. But the good news though now is that just don't make that same mistake twice. Go ahead and get in the market, because we project, with the kind of the indigo bar line that you see here on the far right, we project that while 2022 might not appreciate by 17%, which isn't necessarily a bad thing, right? Because the average is 4, and 4 over time holds and proves to be a healthy average for our economy. We still project that in 2022, the home prices are going to appreciate over the course of the year of 2022 by another 9%. So the lesson here is, don't wait. If you are going to buy property, let's get in the market before the prices, while they might not go another 17% on you, if you can buy now, you might as well stay away from the full 9% that we're trending by the end of this year. We're already in quarter 2. So again, let's learn, lesson learned from, especially in 2020 when COVID, there were so many things happening, and lots of folks felt unsure about lots of different things. And sometimes a feeling of uncertainty makes people kind of analysis paralysis, kind of freeze. And for folks that froze in 2020 in terms of buying, but then realized, no, really though, I really do have to buy. It ended up costing that wait costed a whole lot more money when we transitioned that purchase from what could have been 2020 into 2021. So here at the Price Group, we just want to provide these facts and figures, this trend line to all of our clients, so that if this information helps you to put a tourniquet on your waiting game, it looks as if, based upon how the numbers are trending, that is going to be in your best interest. So again, when we talk too about, well, what if I spend this money today and the market slows way down tomorrow or way down next year? Well, here's the thing. Even if it slows way down, again, 4%, even if it slows to a 4% annual appreciation, 4% is the national average. That's what we're shooting for. That is still very much a win, right? And again, in the entire 32 years of history that we have graphed here, we only have 5 of those years where it did go into the negative, but then you can see it after that 5 years on one hand is a long time. In terms of property ownership, it's really not that long. It definitely rebounded. So it came back. And again, in a 5-year span of time when we're talking about property ownership, that's not a terribly long amount of time. So the other thing that this data, the numbers that have already happened in the past, so something that has happened in the past is proven, it's factual, right? It's not speculative. This data shows us that a good conservative rule of thumb is that when you purchase property, as long as at the end of the day, the trend in our housing market in our country shows that as long as you can hold it for 10 years, you're gonna come out on top. You could kind of argue that to even be, to even kind of shorten that to, and a lot of times when you look at these trends, even holding it for 5 years or 7 years has you coming out on top as well. But definitely a conservative rule of thumb is 10 years. So while we cannot predict the future, a lot of our clients are saying, in the past, Emily, I'm buying my forever home. This is the last purchase for me. And then 2 years, 3 years later, life happens, something shifts. Often really good things shift that then have our clients say, well, I know I told you it was the last purchase, but I'm going to buy again. We're going to make another move. So point being, we never know what life is going to bring our way, and none of us can predict the future. But we do know that the way housing works in our country, that is, if you can hold it for sometimes a 5-year period, very conservatively a 10-year period, you're going to come out in a healthy way. And so that is good to know as well, because I believe that the average homeowner already tends to hold their property for somewhere between that 5 to 10-year span of time, which is in alignment with this data also. So you should be confident in making your purchases as long as you've got a plan B or plan C, if you needed to be able to hold that property into the future. So that either means that what do I mean when I'm talking about holding property? Well, it means that perhaps you live in the property, right? And sometimes that's why when I'm consulting with specific buyers, I always get really excited when my buyers find property that they can, if they needed to, grow within that same property without having to move. So if they're buying in a market, Kentucky has basements, Florida does not. But sometimes when you have basement space, you can finish more space if you needed it in the future. If you have space above the garage, you can finish more space if you need it in the future. Different things like that. So that's a good tactic for being able to hold property, even if your needs change. Another really good tactic for holding property is, even if because of a career move or something like that, you have the opportunity or the need to physically relocate, then you can always convert your single family residence into a rental property if you needed to. There's lots of options with real estate. All right, let's continue our conversation. So again, this is complementing the statement that I made earlier about a good rule of thumb is if you can hold it for 10 years, you see here on the trend line of home prices looking at it on an annual basis, you see that over time, even if you dissect to that 08, 09, 10, 11, 12, even if you dissect into those years, you see that the trend line corrects itself. All right. We have the trend line over time always has home prices in our country going up, which means that it is a fantastic investment, because if you buy today, unlike vehicles, your housing is over time going to be worth more tomorrow than it was today. It's going to be worth more over time than what you bought it for, which again makes it 2 checks in the box. Great shelter and a place to live, which we all need, and a great way to build wealth for your family, and fund your future life by design with the wealth that you can build through the real estate that you own. And this graph shows that positive trajectory. Again, it's a positive trajectory all the way back. This graph at least takes us back to 1990. So it's good facts, and knowledge is power. And then you're more confident to make more confident in the decisions that you make. That's why we're wanting to bring this information to you this evening. All righty, next up. All right, so let's talk about interest rates. Lots of complexity, I understand, in the conversation around buying right now. But we are happy to equip all of the questions that we're getting with answers. So let's talk about interest rates. The first thing that I want to mention about interest rates is that, just to kind of clear some information out there, or clear some kind of myths. Sometimes I find that buyers think that the interest rate that they are quoted from a lender or a loan officer when they go to inquire about a pre-approval letter is the interest rate. That is not true. When you do, if you're going to finance any part of your purchase, when you're going to go buy property, you do need to get pre-approved with a lender of your choice prior to beginning your house shopping process, so to speak. Definitely prior to making an offer. In that conversation, the lender is going to talk with you about the interest rate that is applicable to that day and time, because that's the known quantity. The no interest rate can be locked, and locked is another word for kind of like guaranteed. No interest rate can be locked until you have an executed contract. An executed contract is when the buyer and the seller agree and they both sign on the dotted line. Now we have a deal. It's a contract. All right. Not an offer. An offer is when a buyer says, I would offer you this, will you take it? And an executed contract is when the seller and the buyer negotiate, land on the same terms, boom, lock it in with signatures. That's an executed contract. Then that executed contract goes to the lender, and then the lender and the buyer work together, because that's the lender's specialty, not mine. But then they work together in actually locking a rate. So it could very much be a different rate than what you were quoted or spoken to about when you first inquired about the pre-approval process. Not because the lender's doing anything shady, but because the interest rates shift day to day in terms of what they can lock them at with the loan product that they are offering you. So with that being said, we all have a good understanding of the fact that interest rates are definitely on their way up. They have already moved up since the start of the year. They're projected to do it again. So an interest rate is the measurement by which how much it cost you to borrow money. There's a fee to borrow money. Sometimes it costs a little bit, sometimes it costs a lot or more. As the interest rate goes up, it's going to cost more money just to borrow it. So it is natural that as buyers, we want to keep our costs down. And when we're spending money every month on our monthly mortgage payment, I personally, I'm assuming you're the same. I'd rather spend more money on the principal to pay down actually what I owe on the property, because by paying it down, I also build my equity faster, right? I would rather spend more of my money on that and less of my money on interest. Interest does nothing for me. It's just a payment that I have to give back to the lender or the bank or the financial institution that let me borrow the money in the first place. It's the cost of borrowing the money. So I would rather pay as little as possible, right? That means that anytime that you can get a lower interest rate or position yourself to benefit from the best interest rate possible, you're being a savvy buyer. So the takeaway from all of this is that as a buyer, when we are in a current market right now, a current economy landscape where, again, can't predict the future, but we're all pretty certain that those interest rates are probably going to end in 2022 higher than they are right now. If we know that, then part of being a savvy buyer would be that there is urgency around locking your rate as fast as you can. If the interest rates are on their way up, wouldn't you rather lock your rate when it's here rather when your rate is here, right? If you can kind of see my hand in the screen, of course you would. And so let's step backwards. Locking the rate means you have to have an executed contract. So there is, when you're thinking about being smart about limiting, putting a tourniquet around the amount of money you're going to spend in which to borrow money, then there is a conversation of urgency around getting an executed contract as fast as you can, because you cannot lock the rate till you have an executed contract. All right. Here's another really positive thing to think about when it comes to interest rates. And I'm not a lender, so I'm not trying to swim outside of my lane. Obviously, talk with your trusted lender, and they are the best resource for you about this. But basically, when you have a mortgage, get a mortgage, there are different types of mortgages and different types of products. If you get a fixed interest rate, the word fixed means that rate stays the same. Stays the same on payment number one. And if you have a fixed interest rate for 30 years, that principal and interest payment is going to stay the same on the, what would that be, 360th payment, I believe, if you paid it all 12 months of all 30 years, if I just did my math right. If I didn't, give me grace. Anyway, all right, that principal and interest rate is going to stay the same because it's a fixed rate. And there are things right now in the world, I think in every season of life, if we want to get right down to it, that feel a little unknown, a little unpredictable, a little uncertain. And I think that as humans, we sometimes have this like weird idea in our head that if we can just control everything, if I can just control it, then I will feel better. And when the fact of the matter is that we really can't control much at all, right? However, one of the things you can control is locking your interest rate, because once you lock that rate, if you lock a 5.5 today and next year, or the year after, or whatever, it doesn't matter. It doesn't matter how international relationships are going. It doesn't matter the political landscape. It doesn't matter things such as inflation. It doesn't matter, heaven forbid, if there was another pandemic. I'm not trying to be negative. I'm just trying to say all the things that we're all like, oh, those can't affect your fixed interest rate. So if you're seeking to control something financially, one of the ways that you can control something financially is to move with sensible urgency right now in finding the property that you want to purchase so that you can lock that interest rate, and that interest rate can be yours for up to the next 30 years, should you so desire. And you don't have to worry about any extenuating circumstance in the world or the economy or the nation changing your cost to borrow money for that property. So that's a really, really smart way to think about it. And you want to be thinking about it that way to be a savvy buyer. Now, let's talk about interest rate here and how it impacts our monthly payment. Here's why it's really, I've had people before say to me, oh, Emily, it's just a point difference. Oh, Emily, it's just a half a point difference. Well, okay. But I still think that here at Price Group, we like to educate all of our buyers about that half a point, about that point, because there is a difference. And again, knowledge is power. We want to equip you with all that knowledge so you're super confident in all the decisions that you make. That is our goal. So, and I know that these numbers are probably really hard to see on your screen, and we won't stay here for long, but we can dive deeper into this. Reach out to us to schedule a complimentary consultation. We're happy to sit down and really crunch numbers and work with you and connect you with great lenders and kind of put your whole financial puzzle together. But for the sake of the high-level conversation right now, here's what I want you to look at. Let's just look at the top row, since that's easiest probably for everyone to see on their screens from everyone who is joining in. That very top row of this graph says, what if you financed $100,000? Okay, what if you borrowed $100,000? Well, and all of this math is speaking to just principal and interest rates, principal and interest payments, and it is also assuming a 30-year fixed rate loan term. Okay, so this is not looking at PMI and taxes and insurance, not looking at that. It's looking at principal and interest. So if you were to finance $100,000 and you were able to lock an interest rate because you got an executed contract, because you worked with the Price Group and we helped you negotiate and you got that house you wanted, the right house for you, and you had an executed contract, then your monthly payment for that 30-year loan at a 5.0 rate would be $537. Okay. Now, let's say you waited a little bit, and interest rates bumped up just 1 point. It just went from 5 to 6. Well, that same amount to finance, $100,000, so that same house, if you will, now just 1 point higher is now going to cost you $600 a month. So that is a difference of, let's do this math here. That is a difference of $63 a month that your cost went up. So when you think about like your monthly budget, $63 more because the interest rate went up 1 point to afford the same house. So you're like, all right, well, $63 a month, Emily. Okay, well, I think $63 is a lot, but all right, $63 a month. All right, fair enough. But what about if you look at it over the course of 12 months, over the course of a whole year? That's $756 more dollars, nearly $800 you're spending to own the same house, right? So what I would encourage you to think about is, what is all the other things that you could do with that $800, right? Wouldn't it be great to have the house and still have the additional $800 or $756 of cash flow every year? That's why you want to pay attention to interest rates. The same house is going to cost you more money incrementally over a month, and then more impactfully over each year. And so you just want to be smart about that financially. All right, let's continue on with our conversation here. So when we talk about mortgage rates, what we want to share with you overall about them is that I know in recent years, really within the last decade plus, we have had interest rates well under 6.0. And so from recent memory, we feel like when we start seeing a 5 or a 5.5 or a 5.7, it's like, whoa, these interest rates are high. They are higher than they have been in recent years. Fair enough, yes. But what I think it's important to reflect on is that if you look all the way back to 1972, that's a long time. That's nearly what, 50 years? The average, the historical average since 1972 is 7.8 in terms of mortgage rates. If you go back to just 1992 or 1990, so the past 30 years or so, so even if you just look at it from there, the average mortgage interest rate has been right at 5.97, let's call it 6.0. So the beautiful thing right now is that even though interest rates are on the rise, if you lock your rate anywhere between 6 or a little under, you're still really winning in terms of you're just hitting the average or still underneath the average of the mortgage rate average when we're talking about 6 all the way back for the last 32 years. So in the grand scheme of looking at it that way, you're still doing really, really well with being smart about the amount of money you're spending to borrow money. All right, let's continue our conversation. So as we conclude our conversation this evening, so now that we've talked about, we wanted to spend the majority of our time tonight talking about all of those factors. You know, every day, our entire team, we are in conversation, meeting. We met with 49 different folks just last month who are looking to buy or sell, and we had the privilege to sit down to be able to get the ball rolling for them. So we are every single day, we're talking to multiple buyers, multiple sellers, talking to multiple clients about their real estate goals and how to navigate this market and make sure that we're constructing a winning strategy to help them get the job done. And in those conversations, we recognize that from our buyers, people in our whole, people in our world, so to speak, that are looking to buy, thinking about buying, those are the common questions. How does this interest rate affect me? What's going on with inventory? What's going on in the market? So that's why we wanted to spend the majority of our time tonight talking through that, to kind of hopefully here at the Price Group, we have a favorite phrase, which is clarity is power. So I hope that tonight we've given you great clarity and that you feel powerful with a little more knowledge under your belt. And so to conclude our conversation this evening, I'll speak briefly about, so now that you've got some good, accurate, pertinent knowledge as to the market that we are all in right now. Okay, so now I think that in dissecting the conversation around interest rate, the conversation around annual home appreciation, the conversation around the trends in our country, it's a great time to buy. It is a great time to buy, and real estate over time continues to be a fantastic investment. Most of us are going to spend dollars one way or another to put a roof over our heads. So by purchasing the real estate you live in, you are benefiting from checking the box on the shelter that you need, and also building wealth off of that money you're spending anyway. Such a powerful play. So then it becomes, well, okay, how do I get ready to buy? So I mentioned earlier, this is a market that moves really fast. Remember, in our inventory conversation, the product is moving off of the shelves. It's moving off of it, goes on the shelf, comes on the market, and it goes really fast because of the demand for the buyer. So now more than ever, it is really important to get ready, before you go house shopping. It's no different than if you're going on vacation. You're going to get ready before you have to board the plane, right? You're going to figure out who's taking care of your dogs, and you're going to figure out what you're going to do with your mail, and you're going to figure out what you're packing and doing your laundry and packing your suitcase and booking where you're going to stay, and you're going to be all ready before it's time to go on the vacation. Same thing with buying a house. You're going to get ready to buy before it's time to buy. And you need to, because the market is so fast. What I mean by that is that you want to make sure you're working with a trusted real estate professional. Price Group would be a great choice for that. It is very important more than ever that in advance of you needing and or wanting to make a purchase, that you consult with a professional real estate agent. You hire a professional real estate agent. And as a buyer, what that means is you authorize them to represent you, okay? So that you can benefit from them serving as your advisor, as your consultant, and somebody to help guide you in doing the right things to get ready to go, so that when the right house and the right opportunity presents itself, you are ready to be able to offer on it. If you wait to get ready until the right property presents, you will miss your opportunity because it's going to move faster than the time that it would take you to get ready. And what I mean by getting ready is, and when you sit down with us here at the Price Group for a complimentary consultation, we'll walk you through the detailed steps of getting ready. But we're talking about making sure that you've got your finances in order, that we're clear on making sure that we're shopping for a house that's going to present the right scenario for you in terms of what you want to afford month to month, and that a lot of what we do in our consultation with our clients is we're going to sit down before the house presents itself, right? Or before we find the house for you. So before you get all excited, which is so easy to do when it's like, oh, this is the one, before that happens. So we have a nice, clear, level brain, level head on our shoulders. We're going to talk through all of the different strategies that we use here at the Price Group that are proven to help our buyers win the right house for them. Again, knowledge is power. We're going to equip you with the knowledge of the strategies that when the right house becomes available and you want to offer on it, you will already know the strategies that are going to serve you, so that we can put your negotiations together swiftly to match the pace of the market and in a way that you feel very confident about. I cannot stress enough that more than ever, if there's one thing you hear from our conversation tonight, this would be the takeaway. More than ever, we are in a market where it is of utmost importance for you to have a consultation with a trusted real estate agent before you get started, not when a house pops up on the internet that catches your eye. And so here at the Price Group, that's one of the main services that we offer. We offer complimentary consultations so that we can help you do just that. We often meet with people 6 to 12 months before they are actually planning on making a move. That's how much we believe in the value of being your advisor and your consultant in the real estate industry. All right. So, the other thing that we're going to talk about when we get together for our complimentary consultation is that here at the Price Group, we leave no stone unturned, and we don't want you to go it alone. Because if you go it alone, we talk with buyers sometimes, they're like, oh, I can look on the internet and find houses, and I can see everything on the internet. Well, when we get together, we're going to dive deeper into this conversation. But for the sake of tonight, the information that I want to empower you with is that it is very smart, again, more than ever, when we have an inventory rhythm that is making property go off the shelves very fast. It is very, very crucial to make sure that you align with a real estate professional, such as the Price Group, who has a proven track record. Not just a good idea, but they can prove to you that they have done it in the past. Price Group, we do this often, all day, every day for our clients, where we are looking for both on market properties, meaning on the MLS, the multiple listing service, those are the properties that you're going to see on, say, like realtor.com, on the internet, right? And also off market properties. A lot of what we do day in and day out, we actually have an entire department here at the Price Group dedicated to working on this every single day, is that we are researching off market opportunities for our buyers. So the right house for you might become available on market, and the right house for you might also become available off market. And if you are limiting yourself by working with an agent who only waits for something to show up on the MLS and then they go unlock the door for you, you are really limiting your choices. And if you are going it alone thinking, well, I don't need a real estate professional to help me, I can find the houses on the internet, you are also really limiting your choices and your opportunities and your options, because only a portion of what is available for you to purchase is available to be seen online. And so when we get together, we can talk more about how we are able to oftentimes find great off-market opportunities for you, and it broadens your choices. And the other really winning part of if the right property for you presents itself off market is that if it's off market, the whole world doesn't know about it. So the competition is usually less, which makes for even a better situation for you as a buyer. So really, really multiple wins for you to make certain you are aligning with a real estate professional who has a proven track record of securing off-market options for their buyer. That is the Price Group. We would be happy to help you with that. So reach out to us and we can get that conversation going. All righty. So again, when we get together, we're gonna spend crucial time in making sure you are ready to buy. And part of that conversation is that we're gonna talk through what we call, our analogy is the cards that you hold. If you're playing a card game and you've got 4 aces in your hand, it doesn't mean you have to lay them all down, but you know what you hold, and then you're empowered to decide what you're going to lay down and what you're going to keep in your hand. So that's how we think about it here as we advise and consult and guide our buyers. We're going to have a very thorough conversation with all the different cards, all the different aces, all the different winning strategies that you hold as a buyer in working with the Price Group through our guidance in this market. And so we're going to really educate you about all the cards you hold. And then that way, when it comes time to offer on a property, you are going to be empowered and feel confident in deciding what cards that you want to play in order to win the right house for you. Also in this conversation, we have solutions, and we can talk more about this in our one-on-one complimentary consultation that we can offer that we are happy to offer to you. We'd love to sit down and talk with you about all your needs and make a plan that is built for you. And one part of that strategy, again, in getting ready before it's time to buy, is to work on ways that positions you to be not contingent upon the sale or closing of another property. And you're like, but Emily, I own another house and I don't want to own 2 houses at the same time. Yes, we have solutions for all of that. So again, that is a deep dive conversation that would be best to have one-on-one. So reach out to us and we can talk you through that. But just to know, we are able to equip you with options and solutions to help you be positioned as an A-level buyer, which is what you're going to need to be positioned at to win in today's market, where you are often competing against other buyers. Even if you technically own another house, we've got options to position you, to help you position yourself without those contingencies. So another great way to kind of like strengthen your buyer muscle and be ready to win that right house. And so, yes, so we invite you to reach out to us at choosethepricegroup.com. When you go online to choosethepricegroup.com, you're going to find that you can there kind of go into the Kentucky, Indiana world of Price Group, or you can go into the Orlando, Florida world of Price Group. And so go for that, choosethepricegroup.com. As you select the market that is where you are focused on. From there on our website, you will find on our website that there is the option to search for topics around buying. There's also the option to search for topics around selling. But for tonight, we're talking about buying. In our buying options on our website, one of the first things that you can select there is to request a complimentary consultation. And you can just click on it right there from our website and put your request in. You don't even have to pick up the phone and call. So you can right now from, your smartphone or whatever that you have right now sitting on your couch, you can go right to our website, choosethepricegroup.com, go into the buy part of the website, and from there request your complimentary consultation. And myself or one of my colleagues, a member of the price group, we would be honored to sit down and meet with you. And the purpose of the consultation is to understand what you want or what you're considering. Sometimes in a consultation, you're like, I don't even know if I should do this. This is kind of what I'm thinking. We can kind of help you analyze and dissect your choices. But we want to learn about what is important to you and what you are considering and or needing to do with your real estate goals. And then we also want to understand, what you're concerned about, if there's something you're nervous about, if there's something you're unsure about. And we want to understand everything that's important to you. And then what we are happy to do in this complimentary consultation is craft a strategy or two, because everyone feels good with options, right? That are built to serve you and your overall real estate goal or need that you have. And then from there, we hope to earn your business. But the consultation itself is just a conversation to help get you equipped with a strategy to understand kind of how to get from point A to point B, or how to connect all the dots. Because sometimes in the world of real estate, it's hard to figure out how the dots connect. And so you can really rely on us and count on us to build that strategy for you based upon what you need. We customize our buying strategies and our selling strategies one-on-one based upon our clients' needs. It's not a one size fits all. And so we would love to be able to meet with you to have that conversation. So hop on over to choosethepricegroup.com, request a complimentary real estate consultation, and myself and or a member of our team will be in touch with you definitely tomorrow and to get that all set up for you. And through that, our pledge to all of our clients, no matter if you're selling or buying or building your investment portfolio of real estate, one of the things that we ask that you hold us accountable to, we are here to serve you. We are here to be your business partner in all of your real estate needs, to work for you, to represent you in those endeavors. And we want to be accountable to our promise that we make to every single client and every single market that we have the privilege of working within. And that is 5-star service, 5-star experience, every client, every time. That is what we pledge to you from the very beginning. We ask for you to hold us accountable to that through the entire experience. And that is our promise to you from our entire organization of what you will receive when you entrust us to help you with your goals. And so that concludes our conversation for this evening. So for those of you that joined, thank you so much. You can reach out to us for more information at choosethepricegroup.com on our website. If you want to reach out to us voice to voice, you will find the different numbers for all of our different offices. And a member of our team is happy to connect with you, and we'll make sure that we get you equipped with the answers that you need to your questions. And a good first step is to schedule a complimentary real estate consultation with us here at the Price Group. So again, we can learn about your goals and craft a strategy that is that will serve you for what you're intending to do with what you're focused on and what you're working on. So thanks so much for spending some time with us this evening. I hope that this was helpful and insightful for you. And we are here to give clarity, because clarity is power, and happy to serve all of our clients across all of our Price Group markets. So I'm Emily Price with the Price Group at Keller Williams, and we'll sign off for this evening. Visit us at choosethepricegroup.com, and I look forward to hearing from you soon. Thanks so much, everybody.